Today's positive trading in the indexes create the probability or the possibility of a bullish harami telling us the downtrend has stopped. This is also in line with the stochastics almost getting to the oversold area. However, what we need to see to confirm a bullish harami, as well as the inverted hammer signal, is a positive open and positive trading. That would also imply that the 50-day moving average is the area where the bulls are starting to step back in. However, the strength of a reversal still has to be confirmed with a close back up above the T-line. The S&P 500 actually touched the 50-day moving average on Friday's strong selling and also did a bullish harami inverted hammer signal. That gives us a much more clear expectation of knowing what the market will do based upon how it opens tomorrow. Again, a positive open would give a double confirmation that the harami had worked, plus our inverted hammer signal is an extremely high probability setup that if you see it open positive or prices open positive after an inverted hammer signal, the probabilities of an uptrend is extremely powerful. The NASDAQ has indicated more strength. Notice how the trajectory has been sideways instead of down. And we did a bullish harami today also in the NASDAQ, closing up near the high end of the trading range and above the T-line. This would also be a good indication that if they opened up positive, they were confirming the bullish harami as well as telling us that the T-line was going to be maintained. One simple observation is that if your price moves in an individual stock didn't close below the T-line on Friday when it sold off, the market sold off tremendously, I told you it had some good relative strength. You didn't need the relative strength index to show you that, merely the visual application that as long as you stay above the T-line, you're still in an uptrend. And then today's trading showed a lot more strength in the stocks that did maintain their price movement above the T-line from last week. And the price move, as we've seen in Tesla, has just been huge. Today up 130 points in the overbought area. But for those that had profits, which the profits have been getting huge, especially if you're buying calls along the way, is you still had one criteria that kept you from taking your profits too soon. You knew you could stay long as it continued to trade above the T-line. On the other hand, other big stocks like Apple started giving the indication that you wanted to take profits because it started closing below the T-line, telling you this long uptrend was over. So the probabilities of using the candlestick signals tell you when it's time to sell, and it's greatly enhanced when you know that you've had a sell signal and a close below the T-line. Just very simply stated, if you see a candlestick sell signal and a close below the T-line, the probabilities have gone dramatically against the bulls. The bears are taking control. And the analysis of a wedge breakout, as seen in SPCE, is much more clearly defined when you can see that they couldn't close it below the T-line, and when they got back to the T-line, it was very indecisive trading. Doji, bullish trend, J-hook pattern, wedge breakout, all implying there's going to be more upside. This is not rocket science. This is merely identifying the signals and patterns that are using a high probability support level that is oriented toward investor sentiment, like the T-line, a natural support and resistance level of human nature, and applying the graphics of candlesticks, which is the graphic depiction of what's occurring in investor sentiment. The combination of those two allow you to see much more clearly what's going on in a price trend. That'll be it. We'll see you in the chat rooms.